morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we'll be shifting gears a bit. We're looking at the fixed income segment of the investment markets, which is somewhat less exciting on paper than equity markets. However, no less important, or equally important rather, to an investor's overall portfolio. Now, there have been some interesting developments taking place both on the TT dollar as well as US dollars segments or subsegments of the fixed income market. Let's take a look at what investors can or have been experiencing and what they might expect in the coming months ahead. Turning firstly to the TT dollar market, and there have been quite some interesting developments, particularly in terms of short-term rates, where we can see that the government of the Republic of Trinidad and Tobago, GOT yield curve, has experienced over the past 12 months a very meaningful shift upwards, with one-year rates increasing roughly 0.7% from 4.14% just a year ago to 4.83% in its most recently published Trinidad and Tobago yield curve, as published by the Central Bank of Trinidad and Tobago. And the more medium-term tenors, there were a 45 to 48 basis point or 0.45 to 0.48% shift over the 5-year and 10-year periods, moving from just under that 5% level at the 5-year marker to just about 5.45%, while at the 10-year segment, we can see that those yields would have shifted upward as well from 5.7% to just about a 6.16%. Ultimately, what does this mean? It means that there is increasingly attractive yields on offer for investors who are willing to go out for longer and longer investment periods, particularly if you're focused on government securities. Now, at the same time, we've seen a very interesting trend in terms of relatively low, on a reported basis at least, relatively low to stable inflation, with inflation or headline inflation in this bluish line falling from 1.4% year over year as at that May 2025 period to just about 0.4% at the May 2026 reporting date. Now, what does that mean? It means prices, at least on a reported basis, are increasing at a slower rate today, or in a most recent period, relative to just about a year ago. So that also means that for investors, purchasing power in an environment where interest rates are increasing on investments is being preserved. And in fact, there's a growth in purchasing power over time if you are putting your money to work to beat that rate of inflation, which is trending lower, as we can see based on publicly available information. Now, overall, in terms of key market indicators in the TT dollar investment space, we can see that one-year repurchase agreement rates, which is somewhat of a proxy for deposit rates as well, have increased on average from just about 3.55% in just about a year ago to around just under 3.9% as at the end of June 2026. 5-year GOT yields or government yields, as mentioned, climbed from 4.97% steadily to 5.45%, and the 10-year government yield as well climbed steadily from that 5.7% level continuously to that 6.16% level. Now, for investors, just one caveat: bear in mind that these are yield curve estimates, and of course, based on who your investment provider is, those yields would differ slightly from the yield curve in terms of offer or investable yields. Also, one of the key market indicators we would have noticed has been continued relative tightness in terms of excess liquidity as measured by average excess reserves, and we can see that that has hovered and is actually towards the lower end of the most recent data set, falling from about $4.8 billion in June of 2025 to just about $4.25 billion at that June 2026 marker. So what does that mean? It means that liquidity circulating within the financial system, as measured by this particular proxy, is a bit on the lower end of things at this particular point in time. So looking ahead, we do expect inflation at the domestic level to remain relatively stable based on the trends that we've been observing, notwithstanding geopolitical events that have taken place, which do tend to have an impact on inflationary pressures in our local economy. Elevated interest rates are more likely to persist over the near term. Excess liquidity is expected to be on the lower end over the short term, and continued active government issuance is more likely, as well as the government continues to fund its deficits through via borrowing as one of those mechanisms. And of course, that is going to mean more options in terms of investing for investors on the TT dollar space. Turning very quickly to the US side of things, of the fixed income market, well, a very similar trend. We have seen a broad shift upwards in terms of investable yields, with that July 2026 yield curve for the U.S. Treasury yields increasing across most tenors from the 5 to 30-year space, with fairly stable yields around that just above that 4% level over the 1 year, and that is probably a reflection of greater inflation expectations by the overall market in the U.S. or U.S. investable space or U.S. interest space. And we can see that being evidenced by a slow creep in both the consumer price index or CPI in that purplish segment, as well as the personal consumption expenditure index also moving up from 2.6% in that greenish line to just about 3.4% over the past 18 months or so, which is well above the Fed's 2% long-term target, the U.S. Federal Reserve rather, which does mean that inflation expectations have been growing, and that would also result ultimately in a lower probability of interest rate cuts anytime soon. Now, in terms of the impact to investment markets, we can see that there are much more attractive investment yields on offer, both in the short-term space, again, looking at that repo rate of return at around 3.5 to 4.0% over that 1 to 2 year average space. Trinidad and Tobago, in terms of their US dollar investment bond options, those yields are also appearing relatively attractive at around 5.7 to 6.1% in terms of straight government investable yields, while at the corporate level or quasi-government level, we can see that there are also some relatively attractive yields on offer. NGC's 2036 bond, for example, trading at an investment yield of on average of around 6.8% currently. Heritage Petroleum, a 2029 maturity at around 6.5%. So for investors looking at the international fixed income outlook, do we expect inflation to cool anytime soon? Well, it's on a knife's edge right now with, again, geopolitical tensions creating a high degree of uncertainty. U.S. interest rate hikes, or the lack of cuts rather, might be more likely in the near term. Bond market stabilization and stable credit ratings probably a bit at risk, or there's a greater level of uncertainty, again, all stemming from geopolitical events and that continued persistent higher than a target or long-term target inflationary figure. So ultimately, for fixed income investors, what are some of the key takeaways at this particular point in time? Well, both in terms of whether you're a TT dollar or a US dollar investor, there are improved returns on offer. Fixed income still offers a high degree of principal preservation, whether you are looking at the TTO and US dollar investment space. Within the US dollar space, there is a greater level of issuer diversification, whereas in the Trinidad and Tobago dollar space, there is a slightly lower level of issuer diversification, with the primary investment options typically being government securities, whereas with increased government issuance, both in the local space and, of course, a global menu of investment options in the US dollar space, there continues to be a lot more options for investors in terms of diversification by maturity, meaning that you can tailor your portfolio to your particular liquidity preferences, risk preferences, and of course, investment time horizon preferences. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse, email us at info@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.